Philippine Central Bank to help small businesses affected by coronavirus pandemic. Philippine Central Bank Governor Benjamin Jokno has announced that they are encouraging banks to lend to micro, small, and medium-scale businesses affected by the coronavirus pandemic. Jokno said that the new rule allowing banks to count these new loans as compliance with the reserve requirement is basically a cut in the reserve ratio. If a bank deposits less than the required reserves to the central bank because of these loans, they will not face any penalties. Jokno said that these would only be voluntary on the part of the bank to help businesses, and the new rule will probably benefit the smaller banks that are presumably closer to these small enterprises. Bloomberg News reports that the loans may be guaranteed by the Philippine Guarantee Corporation, but details of the arrangement have yet to be released. The enhanced community quarantine over the Philippines' main island of Luzon has forced the central bank to accelerate its stimulus. On April 16, the central bank lowered its key rate by 50 basis points to 2.75%. That move brought the year's total reduction to 125 basis points. The central bank also cut the reserve requirement ratio by 2 percentage points to 12% along with purchasing government debt. According to Jokno, the country still has favorable inflation and sufficient monetary space to maneuver amid the crisis, together with an appropriate peso value compared to other Southeast Asian currencies. The central bank will also revisit its forecast, 2% growth in overseas Filipino workers' 2020 remittances. They will continue to evaluate and implement relief measures to help Filipinos cope with the pandemic economically. In Jokno's words, the central bank still has a lot of bullets in their arsenal to help the national government to meet this national calamity. The Friedrich Naumann Foundation for Freedom, a liberal politics foundation in the Federal Republic of Germany, reported that Luzon accounts for nearly 3/4 of the Philippines' output in terms of GDP. With the enhanced community quarantine, the Philippines could experience losses amounting to $2.6 billion under a shorter containment and $5.4 billion under a longer containment. Trade, business, and public and personal services are expected to bear most of the impact, while manufacturing, construction, agriculture, hotels, restaurants, and similar enterprises may be hit next, followed by transportation.